What's going on, guys? Welcome back to the channel, and in today's video we're going to be talking about Market Cipher A. If you guys have seen my Market Cipher B tutorial on the channel, you'll know that Market Cipher B is that indicator on the bottom part of the chart with the blue waves that go up and down. So if you haven't checked that out, definitely make sure to check that out right after this video. But Market Cipher also has other indicators such as Market Cipher A, which plots signals on top of the candles on your chart. And I know a lot of people see my live streams and they see all these little icons on my candles and they're like, what does this mean? What does that mean? So we showed you Market Cipher B. Now we're gonna show you Market Cipher A. I'm gonna explain what each icon means, and then we're gonna go back in the chart, back test it, and see how we can read this indicator to help us make more profitable trades. So Market Cipher A consists of about 7 different icons or signals that print on top of your candles on your chart. And some of them indicate bullish continuations, some of them indicate bearish continuations, some icons indicate trend reversal, and there's even an indicator that can warn you about manipulation. And that's one of the very, very powerful indicators on Market Cipher A. They play out very, very well, and this is a great way to add confirmation to your trades. So without further ado, let's jump into the charts. So we're here on the Bitcoin daily chart. Looks like a normal chart, right? Nothing out of the ordinary here. But if you do have Market Cipher A, what you're gonna wanna do is you're gonna wanna come up to this top bar on TradingView. You're gonna wanna click this little arrow right next to your indicators button, and you're gonna wanna come down and click on Market Cipher A. Once you click that, you'll see all of these icons that pop up on top of the candles. So real quick, I just wanna go through the different icons, and then I'm gonna explain what they mean and how you can use that to add confirmations to your trades. So if you look here, we have gold diamonds, we have red diamonds, we have red X's. If we come down a little bit more, you see we do have a blue triangle as well as a big red diamond. Those are called blood diamonds. And then if we come back a little bit, you can see we do have green dots that print on top of the candles. And last but certainly not least, you can see here that we have yellow X's. And these are very important. Typically, these indicate a pretty big move. They do play out a lot of the time. So now let's talk about what each indicator means. Starting with the gold diamonds. When you see these gold diamonds, it typically means a bullish continuation or bullish momentum. And normally you see these in an uptrend. As you can see, you have a bunch right here. You have a cluster of them right here, a bunch right here, some right here, and it's typically in an uptrend that you see these gold diamonds. Now, it is important to note when you're looking at the gold diamonds, you wanna see clusters, right? Right here, you have a nice little cluster, you get some bullish action, you have another little cluster here, you come up a little bit more. Typically, the more of them that you see, the stronger the indication. So similar to the gold diamonds, you also have these red diamonds, one right here, these little red diamonds, one right here, and another one right here. Now these red diamonds could indicate a weakening trend, right? So on this uptrend right here, you do see that we come up a bit. We do have this cluster of gold diamonds indicating a bullish continuation. However, you do print one of these little red diamonds indicating that the trend may be weakening. And as you can see, we did come a little bit down here before continuing up and getting more of these gold diamonds. And then you see first little red diamond here was indicating that the trend could be weakening. We took a little bit of a dip before coming back up. And as you can see, more and more start to show up as the trend continues to weaken. You see they start popping up a little more here before finally we do take a little bit of a dump right there. And here's another example. You do have these gold diamonds, right? And we're coming up in this uptrend. You get your first warning shot right here with the red diamond signaling that the trend may be weakening, right? We come up a little bit more and we get another one before coming down a good bit right there. So the small gold and red diamonds, they basically indicate trend strength, right? If you see a ton of gold diamonds, chances are you're gonna have a bullish continuation. And then when you see these little yellow ones, it's indicating that the trend may be weakening and there's more of a bearish trend coming in the future. Okay, and the next indicator that we have are these little red X's that you can see, one here, there's another one right there, these tiny little red X's. And what these indicate is a downtrend, right? So a lot of times you'll see these before we have a dump, right? So you can see we were in an uptrend right here. You get that little red diamond indicating that the trend may be weakening. And then as you come down a little bit, you get this red X indicating that you are now in a downtrend, and you get a big move down to the downside. Similarly, we're coming up right here. You get your first little warning shot with a red diamond right there, another little red diamond here, and then a couple candles down, you print this X indicating that you're going to have a downtrend. And look at that, come straight down. That was a pretty big move right there. Just roughly, let's measure that out. The wicks come down. I mean, this was like this was a big drop. This was about, the wicks come down to like over 40%. So keep an eye out for those red X's and be prepared for a possible downtrend. And you can see how powerful they are, right? These red X's are great. You see right here, we were in an uptrend, right? We're coming up, coming up, coming up. We come down a little bit, indicate that, you know, the previous trend is weakening with this little red diamond, and then you get the X there, and we do come down a little bit. You can kind of think of this as a short entry indicator. Obviously, never trade just based off of one thing. If you have other technicals or indicators that are also indicating a downtrend, then seeing this X could be a very powerful thing. Now, one more thing about these red X's is if you see a red diamond followed by a red X, typically when you see this happen, it does make it a little bit stronger of a signal. As you can see here, we had the red diamond and the X before this big dump. And then similarly over here, you did have a red diamond before the X, and then you got a pretty big dump to the downside. Now, I didn't mention this in the beginning of the video. I did mention all the icons on top of the candles, but you also have the EMA ribbons, which are these lines coming down like this. And this is a mixture of different EMAs, and there's different ways you can use it. And one way you can is by using it together with these red X's. So as I said, you have the red diamond followed by the red X, indicating that you probably have a big downtrend coming. Another thing you can look for to add more confirmation is you see that this EMA ribbon is very, very tight, right? This indicates that the trend may be about to change. And, you know, when you combined with these two signals up here, this could be very, very, very strong. So that's just another way you can add a little more confirmation to these signals. So now let's move on to the blood diamonds. The blood diamonds are these big red diamonds you see, not the little ones, the big, fat, juicy ones. Now, they don't call these blood diamonds for nothing. As you can see right here, you get that big red blood diamond and boom, you came straight down. Let's measure that out real quick. You know, roughly about 15% drop. So clearly this is a very powerful indicator. It's obviously a bearish indicator. Now, another way you can add a little bit of confirmation to this indicator is if you do see the EMA ribbons constricting. As you can see right here, they're nice and wide, but they're coming in and getting tighter and tighter and tighter. And then you print the blood diamond, and this indicates the big move to the downside. So these blood diamonds are to be taken seriously. Let's see if we can find another one that played out. So as you guys can see right here, we printed another blood diamond right here. And when you see a blood diamond following immediately after a gold diamond right here, that does add a little bit of confirmation that you are coming to the downside. And as you can see, the EMA ribbons were constricting as well. So there you go. There's kind of 3 confirmations letting you know that the blood diamond is going to play out. And this was a pretty big move. Again, we are on the daily chart, so these moves are pretty big, right? So the longer the time frame that you're looking at Market Cipher A, typically the stronger the indication. So that was a nice 16, almost 17% move. So you had the EMA ribbons constricting, you had the blood diamond, and it was following a gold diamond. So as you can see, that does play out very well. Now you can see right here, we did print a blood diamond right here, but it didn't really have much of a reaction. Granted, this move probably was tradable. You know, it wicked down about almost, 6.5%. So you could technically trade that, but you could see it wasn't as powerful of a move. And if you look at the EMA ribbons, they weren't quite constricting like the other ones, right? So these are some things you can look for, to know if the blood diamond is gonna play out or not. The ones that play out and have big moves, typically you have the EMA ribbons constricting. restricting quite a bit. So let's move on to the blue triangles, right? You see the blue triangle right here. These indicate a trend reversal, right? It indicates that the previous trend is reversing. So you can see we were coming down here in a downtrend and then we came up. You get the blue triangle indicating a trend reversal, and we continue to the upside. You can see very similarly right here. You see we were in a downtrend, we had that blood diamond, and you came down, and then on your way up, you print the blue triangle indicating that the trend has reversed, and we continue to the upside. So this also works the opposite way in a bearish situation, right? So we're in an uptrend, right? And then you get the blue triangle indicating that the previous trend right here is about to reverse, and we come straight down. And that's a pretty big move, actually. Yeah, that was a pretty big move, about 29-30%. So you can use it in a bearish scenario or a bullish scenario. So definitely very helpful. And on that note, let's move right on to the green dots, right? You have a green dot there. You have another green dot right here. Now, these green dots typically follow a blue triangle, as you can see here, as well as over here. You have the blue triangle followed by a green dot. Now, this is a bullish indicator, and you can use this to help you figure out if you're going to break out. Typically, when you see a blue triangle, right, showing that the trend is reversing up or down, depending on how you're using it. In this case, it was reversing up. You have the blue triangle followed by, you have a gold diamond, another bullish indicator, and then followed by the green dot and followed by another gold diamond. So this does signify a bullish continuation typically. Now, some things that can invalidate this signal is if you have it followed by some red diamonds or, more of a bearish indicator. So right here, you had the blue triangle, right? And then followed by the green dot. You may be thinking, oh no, it's gonna break out, but you typically wanna let 3 candles or so. You wanna let a few candles print after the green dot to let it confirm before you see that breakout. So you can see here, when you do have a green dot followed by a red diamond, close by, typically that can invalidate it. You wanna let 3 or 4 candles go by before you wanna confirm this green dot. So you see we did get 2 gold diamonds, right? But we didn't get the third one. You get a red diamond, and then the trend reverses for this huge move to the downside. So let's try to go back and see if we can find another situation where the green dot was invalidated. So as you can see here, you get your blue triangle, you get a couple gold diamonds, then a green dot, and you're feeling bullish, but boom, then you print a red diamond and it's completely invalidated and you start heading down. So there are some ways that they can be invalidated, so keep that in mind when you're trading. And guys, Market Cipher A works on all time frames. Like I said, the higher the time frame you're using this on, the more reliable the signals can be. So now let's take a look at these yellow X's. We're actually on the 24-minute chart now, and as you can see, we are seeing some yellow X's. I bet you can guess what those indicate. They are definitely a bearish indicator. Now, these are the manipulation X's, right? They indicate manipulation in the market to the downside, and typically when you see these, this is a warning, right? If you have Market Cipher B up, as I know some of you have Market Cipher B, you might get a green dot down here, which is typically very bullish and indicates a bottom, but when you see a yellow X, it invalidates the green dot. These yellow X's are no joke, as you can see. Most of the time you see some pretty big moves to the downside. Another thing to keep in mind here with the yellow X's is typically the first 2 are the most brutal. You get a big move to the downside, you get another big move to the downside, and then you might print a few more, right? You got another one here, and then let's say you get another one right here. You come down a little less. Once you get 4 yellow X's, it does start to indicate seller exhaustion, right? The bears are getting exhausted. They're losing momentum. When you see that 4th yellow X, you can expect the drops to be less significant and less significant as the bearish momentum slows down and the sellers exhaust out. Let's try to find an area where that happened on the chart. So we're down here on the 1-hour chart now, and you can see you had 1 yellow X, didn't bring you down too bad. Then that second one really dumped you down, and then you get a third, moves you down a little bit, a fourth moves you down a little bit, you come back up and get a fifth, you come down a little bit more. But as you can see, the first and the second one kind of brought you down way more than these last ones, because this is where the sellers are getting kind of exhausted. The trend reversed for a little bit, and then eventually you came down again. But you can kind of see how those, you know, those 4 or 5 yellow X's, as you get lower, the movement down is a little less than the first two, and this does indicate seller exhaustion. So definitely keep an eye out for those. And as you can see here, you did get a green dot down here on Market Cipher B. People might have been feeling bullish, thinking it was the bottom, but you know, right after that green dot, you had that yellow X. So if you're thinking about going in there, invalidated. I would never recommend entering a long trade close to a yellow X. You want to let them play out, let the bears come in, do their thing, and wait for multiple yellow X's, and wait for, you know, the bearish momentum to slow down a little bit before entering. And then last but not least, you do have the EMA ribbons, right? These white lines going up and down. Now, this is just a collection of different exponential moving averages, and it could be used to find levels of support or resistance, right? As you can see, if we zoom in a little bit here, you did, on these dips, you did find support in these EMA ribbons. And, you know, when the trend reverses, they do come up and reject off of them, right? And you can also use these to signify a trend, you know, reversal when they cross over. As you can see right here, you know, we're coming up. When they're blue and all lit up like this, you're in a bullish trend, right? They're acting as support in a bullish trend. And then right here, they cross over and they turn gray, indicating that the trend is reversing, right? And then you come to the downside and they act as resistance, right? So if you know anything about exponential moving averages, they basically work in the same way, but it is nice to see them kind of flip and cross each other, so you can see an indication of a trend reversal. And it is nice that they, you know, they change color too, so it's kind of clear. You can see clearly right here they change color, and you get a huge move to the downside. All right, guys, I think that's all I got for today's video. I did just want to get this out. I get a lot of questions about Market Cipher A, Market Cipher B. You guys got the Market Cipher B video. Here's the Market Cipher A video. So if you do have it, go turn on Market Cipher A, hit the charts, go back in time, back test it, see how everything reacts with the price action. And also, if you go to the Market Cipher website, I do believe that they have a manual that actually defines each and every indicator, so you can check that out if you'd like. And if you guys have not subscribed to the channel, please hit that subscribe button, click the notification bell so you don't miss any urgent market updates or any of these great tutorials that are ultimately going to help you remain profitable or become profitable. And if you guys want to sign up for FEMEX and start trading with or without leverage, there is a link in the description. You can click my referral code and sign up right there. You do get a deal, so definitely check that out. But with that being said, that's all I got. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out